Hey everyone, Douglas here. Welcome back to the MMT Macro Trader in this market recap for Wednesday, August 2nd, 2023. It is just past midnight. I should be in bed, but listen, I just had to give some thoughts about two absolutely ridiculous headlines that came out today that we need to talk about, that everyone is screaming about is going to put an end to this rally. It's all over from here. It's not. It's not. First one we need to talk about: Fitch downgrading the U.S. credit rating from, it was a AAA to AA plus. I don't know the exact rating that it is. It doesn't matter. It is just, it's pure stupidity. It's asinine. Whatever adjective you want to describe how dumb it is that we are in this situation that we are in still. It's been like 15 years since the great financial crisis, right? After all the spending following the great financial crisis, after all the spending following the post-COVID era, right? After everything we've seen, the fact that for 5, 6, 7 years, the U.S. was able to hold a perfect 0% interest rate for years on end, that we are having this discussion that in some way the U.S. wouldn't have the capacity to fulfill its debt obligations. Listen, there is at least a reasonable discussion to be had regarding the U.S. just shooting themselves in the foot and deciding not to pay, right? That would be like saying, I agree that you might have some outstanding debt. Let's say you have $10,000 debt and yet you have, $2 million in the bank and you just decide, I don't want to pay it. That's one thing. It's a whole different story. So the debt ceiling thing is, again, a reasonable consideration. But even the analogy of having $2 million in the bank with a $10,000 debt is still completely opposite from the situation the U.S. is in. There is no way for the U.S. to ever run out of its own currency. There is no way for the U.S. to ever not be able to meet its obligations. To rate a country that has sovereign control over the issuance of its currency in the same manner that you would rate any corporation is asinine. It is a stupid discussion to be having. And yet here we are, and you still see people. I saw so many headlines from finance people saying that, the Biden administration really needs to take a close look and a tough look at the decisions it's making from its fiscal side, yada yada yada. This is really going to cause some issues. No, the only reason this economy is in any way expanding is because of the fiscal side, because of the fiscal surprise that we saw in 2023, because of the higher interest rates adding the additional interest income. We need more spending. If anything, we need to bring rates back down to zero, but then boost spending, maybe triple spending from here. We need massive stimulus still in this economy. But it is because of the fiscal side that we remain where we are at. Fitch literally saying that the reason that this economy continues to just, barely eke it out is the reason that they are going to lower the rating is something to behold. Here we are. Anyway, rant over on that one. This is dumb. Not going to cause, and if it does, actually, let me put it this way, right? If we do end up seeing some selling, right? We do end up getting some selling overnight. This is a great buying opportunity. I mean, this is finally it. If this is finally, where the top finally comes in, a little short-term top that is bound to happen sooner or later. If this is it, this will be a good buying opportunity. So, yeah, look, I posted this on Twitter. The trader in me loves this, right? It creates buying opportunities just to take advantage of idiots that follow this nonsense, right? Idiots in cash, idiots that are short this market, that have been short this market for the majority of the year. I'm not losing any sleep over taking their money. However, the citizen in me, the activist in me, this is just so dumb. I mean, it's just absolutely dumb that this gets even brought up, that we have to discuss this. That part kills me. So, yeah, a little Jekyll and Hyde here when it comes to kind of how I view this stuff. But the trader in me says, let's just keep it going. Let's keep crushing these guys. And if this creates a buying opportunity, awesome. We will reload when that opportunity arises. So the next headline that we got to talk about is the issuance of $102 billion worth of treasury bonds come this week. And again, we saw this exact same argument play out in June when the Fed, or when the Congress finally raised the debt ceiling. That there was going to be this massive issuance of bills at that point to start funding government spending, and that was going to be some massive liquidity drain. Again, it's the entire kind of loanable funds understanding that instead of banks being able to use their reserves for some other purpose, they're now going to have to put those reserves into treasuries to buy, these treasuries that are being auctioned by the Treasury, and that is somehow going to create some bearish scenario. It's just a complete misunderstanding of the macro framework, and it's not too difficult to just learn the basics of MMT. And the basics of MMT are you can't have a reserve drain, which is what treasuries do. That's what they function as until there's a reserve add. Listen, when the government wants to spend, right? When there's you build a bridge or there's some bill to do something, the Treasury says, hey, we're going to auction some bonds to fund this spending. And then what ends up happening is you have these banks, they're called dealers, they're going to go out and they're going to bid for those bonds. And then ultimately one of those dealers is going to come away with the winning bid. And if there are insufficient reserves, right, let's just take a completely blank balance sheet situation. What's going to happen is they're going to enter into what's called a repurchase agreement, where the Fed is going to supply the reserves to purchase the treasuries. So even if you have zero financial assets, right, zero net financial assets in the private sector, you can still create those, as the primary dealers will get a repurchase agreement to feed them the reserves, to buy the treasuries. The treasuries then go on the books of the dealer's balance sheet, and bam, you have net financial assets. The government's able to make their spending. That spending ends up as savings, net financial asset add for the private sector. And that becomes growth. If that savings ends up getting saved, maybe the bank where those deposits are at, that might end up being actually what gets, used to purchase the next round of treasuries or whatever. But that is how the cycle happens. Maybe that goes into stocks. Maybe that, whatever the government spent, let's say they built a bridge, that bridge builder, whoever got that spending, maybe they're going to spend it on building the next bridge or whatever, right? Buying raw materials and so on and so forth. So that is how the cycle works. Again, this is just not an issue. I think maybe some very short-term kind of rearranging of balance sheet stuff might happen, but there's just no correlation here. There's absolutely no correlation here. There's no causal link here. If it ever happens where we end up seeing a bit of a drop when there's a massive auction going on for treasuries, it is purely coincidental. And we saw that in June, right? There's a massive build in June, and stocks just absolutely rocketed higher. And if anything, actually, after these treasuries get issued out, this is what the banks want, especially in the Eurodollar system. They call treasuries pristine capital for a reason, and it's because they want to hold these treasuries to earn the interest, and that's kind of their capital base to allow the banking system to work. So if anything, this is going to give a boost down the line to the overall banking system as these treasuries begin to flood the finance sector. Anyway, that is what I had for tonight. At least the two headlines that I wanted to get at. Before I go, though, I got to let you know, over on our Patreon, patreon.com/MMT Macro Trader, we finally went live with the dashboard. It is live. You can get access to all the data that is up there. So if you head on over to patreon.com/MMT Macro Trader, patreon.com/MMT Macro Trader, you can get access to everything that we have going on over there. Check that out. I'm excited to get that dashboard up, get your fingertips, get your hands on all the most important data to make the best decisions possible in markets. So again, patreon.com/MMT Macro Trader. That's all I got for tonight. So until next time, good trading, and we'll talk to you then. Bye-bye.